Last week, I had another conversation with a homeowner who was convinced the market just needed a few more months to bounce back. I've had this conversation over and over this year. I've sold over 30 properties, and every single seller thought it'd be best to wait. Especially right now, they're thinking, let's just wait until spring. This homeowner, exact same situation here. Everybody that I've met with from July until now is asking when the best time to sell. And based on how the numbers have gone over the last 24 months, right now is likely the best time to sell, even if it's crowded with inventory, because likely next spring is probably going to see more inventory. So the problem right now is, based on the numbers that we're seeing, it's probably going to cost him another $80,000 to $100,000 if he waits 3 to 4 months, and he won't even realize it until it's too late. What if I told you that waiting for the market to recover could actually cost you more than selling today? Because that's exactly what's happening right now in Metro Vancouver. This isn't the usual slow season. This isn't hang tight, spring will fix it. We're dealing with something much deeper, much different than we've seen for 15 to 20 years. And if you think the market is going to magically bounce back in the next couple of months, you need to hear this. Inventory is climbing, prices are slipping, immigration, which is a major driver of demand, has nearly stalled. Meanwhile, a lot of sellers are still pricing their homes like it's 2021. They're stuck on numbers that don't exist anymore in this current market, and that's really hurting them. And it's costing, anywhere from $10,000 to $400,000 is the worst that I've seen this year. And that mindset of waiting and thinking that things are just going to bounce back out of nowhere is literally costing people their entire deposits and down payments on their property, erasing all of their equity if they're thinking of waiting. Now, I get it. Nobody wants to feel like they're taking a loss, but there's always risk in any investment that you're going to make. The good news, if you bought before the peak, you're probably not losing money. You're just not cashing out at the fantasy number that you thought you'd hit for prices back in 2021 when interest rates were basically, 1.5% to 2%. So today, I want to walk you through what's really happening beneath the surface. One of the worst things you can do is overprice your home. It really just leads to bigger losses tomorrow. Renting out your home is not the safe fallback people think, and what smart sellers are doing right now to stay ahead. Here's the truth. Pricing too high just doesn't make it harder to sell. Can actually cost you more money in the long run. When you list your home, the first week is absolutely everything. That's when serious buyers are watching. That's when you have momentum as a seller. But if your price is even slightly off, that momentum is not there. It doesn't exist. It never started because people aren't looking at your home if they think it's overpriced, especially those buyers who've been looking for 6 months to a year. Buyers today, they're not desperate. They're not overpaying, and they're more patient than ever. And that's mostly driven by supply and demand and the market going down, month after month for the last 12 to 24 months. Inventory, it's up almost 19% from last year, and prices are down well over 5% for the South Delta market, and I think just over 4% for Metro Vancouver. It's not seasonal. It's not emotional. That's just the data. So when you price your home at pandemic era levels, you're not just overpriced, you're never even entering the game. Here's how it usually plays out. You get a few showings, you get some positive feedback, because quite frankly, most buyers and their realtors are not going to give you that harsh criticism and tell you it's overpriced. After a couple of weeks go by, you're wondering why there aren't more showings, why there's no interest, and it all comes down to price. And you don't want to drop the price within the first 2 weeks because it almost feels like you're a bit desperate. Generally speaking, for all my listings, I wait till the 30-day mark until we do any price reduction, and hopefully the sellers are willing to agree at that point. Eventually, all homes are going to sell, but by then, you get less than if you just price it correctly from day one. And this leads to the next mistake. I'll just rent it out. I'll wait for the market to come back. On paper, that sounds great, but in reality, it's a totally different story. Being a landlord is not passive. Maintenance, repairs, tenant issues, damage, delays, vacancy, stress, and most important, it's a lot of your time and headspace. One of the biggest risks right now is if you plan to sell, your tenant could refuse to leave. Your sale can fall apart. You have to give a tenant 3 full months notice. So generally speaking, that's pushing out possession for a new homeowner 4 months from the contract date because you have to give them that full 3 months. So if you're selling your home right now in November, that means that the buyer of your property can't move until March 1st. That's wild. That's a very, very long time for anybody to wait for possession on a home. especially in a declining market. Over time, prices are continuing to slide. There's carrying costs, there's legal fees, and all of that adds up very quickly. Even if everything goes perfectly, the tenant pays on time, they move out on time, there's no issues, the financials still matter. Rents in Vancouver have dropped almost 8% this year. Mortgage payments have gone up. If you think rent is going to cover your costs or maybe even be cash flow positive, you need to do the math and really consider if you even want to take that risk in the first place. Any shortfall, it's coming straight out of your pocket. And then you ask yourself, how long are you actually willing to hold this property? Because this recovery is not right around the corner. This could be a multi-year waiting period before we see prices go back up. There's immigration caps, there's a slowing population growth, demand is shrinking, and inventory keeps building. It's simple supply and demand like any other market out there. When demand drops, supply rises, prices do not bounce back. They flatten or fall and sometimes take years to recover. So before you decide to rent or wait or ride it out, just find what your home is actually worth today and price it appropriately. That's not last year's number. It's not your neighbor's story. It's the real number that a ready, willing, and able buyer is willing to pay for your home right now. That's how prices are determined. It's always what one willing buyer is willing to pay for your home right now in today's current market conditions. But let's zoom out for a second. Interest rates are still pretty high, and while they may come down, we're not expecting any dramatic cuts. Just in this last week, the odds of another rate reduction in 2025 have gone from about 40% all the way down to 10%. Lending is tight, inventory keeps climbing, buyer confidence is nearly at an all-time low. There's uncertainty everywhere, in Canada, economically, politically, and frankly, globally. This is a time where a lot of people will say that the spring will fix everything, and that's just not the case. The spring market is probably going to be oversaturated with listings just like we've seen for the rest of the year, and buyer confidence might not be as good by then either. And let's say if the market corrects a little bit, it's not going to be a few months to see prices going back up. It's going to be years. Even if we do see a correction in the market, sales double, we still have in some areas 10 to 24 months worth of inventory. So with new inventory coming on the market, those numbers are going to extend out even further. So that bounce back, that correction, it's not going to take months, it's going to take years. So as a seller, you really need to ask yourself, are you prepared to hold this property for 3, 5, 10 years just to chase a price that may never return? If you're making a move within the same market, especially a hyper-localized market like a town like Ladner, Tsawwassen, or Richmond, Langley, it's a relative play. If you're moving from townhouse to townhouse or house to house, you're going to be selling for less, but you're also going to be buying for less. If you bought before the peak, you're probably still up, you're not losing money, and you're just not hitting the dream number that you had in your head before. That number was never guaranteed in the first place. It wasn't real until you sold. The sharpest sellers right now aren't stuck in the past. They're not clinging to 2021 prices. They're looking at the data and acting based on today's reality and taking the advice from their realtor from the comparable sales in their neighborhood over the last 3 months. And if you're buying another home, you're buying at a discount too, just like I mentioned previously. If you're cashing out, you're doing it before the next leg down, not after. Every single sale, there's a new precedent for price in your neighborhood. And if you're in a condo building that has 10, 15, 20 condos for sale right now, it's literally chasing the market down and down and down. Each sale is at a lower new price, and that's setting the benchmark for your building. And if you think selling is tricky, buying in this market is a whole different experience as well. Most people don't realize the system is stacked against buyers until it's too late. If you have any questions at all, reach out anytime. I'm Blake Chansey with Real Broker. I'll see you next time.